Hi everyone, and welcome back to Module 5, where we're exploring different types of data analytics. Alright, so in Module 5, Learning Objective 3, so this video here that we're talking about, we're going to be describing descriptive analytics, which is the first of the 4 different types of data analytics. Alright, so if you remember from the previous video, descriptive analytics are all about answering questions like, what happened? All right, so let's give a formal definition to descriptive analytics. So descriptive analytics are analyses performed that characterize, summarize, organize features and properties of the data to facilitate understanding. All right, so characterize, summarize, and organize the data so that we can facilitate understanding of the data. All right, and some of the statistical tools that we'll be using to do this are things like really basic things that you're probably already familiar with. Counts, right? Like how many men versus women do you have in your sample? Totals, sums, averages, subtotals. We might be using these statistics, these are really basic statistics, to figure out, for example, what is the balance of finished inventory that we have in the warehouse? And how does that break down by product line? So then you would have subtotals. And what is the average cost of each unit that's in inventory right now? Maybe we can supplement our descriptive analysis by figuring out what we think our cost of goods sold might be next period when these items are sold. We could look at maximums, minimums, medians, standard deviations, really basic statistics just to get a handle on what's in our data. We could use graphs like bar charts, really basic bar charts. We could look at histograms, you know, how frequently did this event occur within our data. We could look at percentage changes from one period to the next. This would be called horizontal analysis. We could look at the percentage change to see how we're performing. Did revenue go up or did it go down? Why did it go up or why did it go down? Why did selling general and administrative expenses go up or down, right? So understanding what's going on. And we could also look at like some ratio analytics that the finance professionals use. So we could look at things like measures of liquidity, like the current ratio or the quick ratio. We could look at measures of profitability, like return on assets, return on sales. We could look at turnover ratios to see if our inventory is selling. And we could look at our solvency ratios like debt to equity. And so there's all different types of really basic statistics that you're probably already familiar with that we can perform in descriptive analysis. So what I'd like to do now is to walk you through a brief example of descriptive analytics. I'll see you in just a moment.
Hey everyone, in this video I'm going to walk you through looking at some descriptive statistics using retail data. And so this data that I'm using in this video is available on the lecture notes website directly above the video. So if you wanted to follow along and explore this a little bit yourselves, you can do that. But what I have here is some information. This is actually like real financial statement data from publicly traded companies. And this data was obtained from a data source called CompuStat. So CompuStat is like a service provider that goes into companies' financial statements that are reported with the SEC, the Securities and Exchange Commission. And CompuStat extracts that data from the financial statements and puts it into like an Excel format so people can work with the data and manipulate it and calculate things and analyze it. So this data is from CompuStat, and it's for the retail industry, and it's from the period 2018. So you'll notice we have this variable here. This is called global company key. This is what CompuStat uses to identify each unique company. They also use ticker symbol, so they provide that as well. They tell you this data date. This is the date of the financial report filed with the SEC, and this tells you which fiscal year it pertains to. So all of these financial statements were filed in the year 2018, but some of them relate to different fiscal years. If you remember from your intermediate financial accounting classes, we say that if a company has a year end, let's say of December 31st, their fiscal year, it corresponds to the calendar year. But let's say company's year end is on January 31st, like this company here. January 31st, 2018, we say that this relates to fiscal year 2017. So it's just a convention that we use in accounting to kind of identify which companies relate to one another in terms of when their financial years end. So if we wanted to compare the results for 2017 for every company in the industry, and if different companies have different calendar dates for their year ends, we kind of have to put them into different buckets so that we can compare. And so this fiscal year thing kind of does that. It puts things into, or puts companies into different buckets so that you can compare performance within a given year. And it's strictly because some companies, for example, have a year end on January 31st, some have a year end on December 31st. There's one here that has a year end on July 31st. So with all these different dates, we kind of have to have a convention to put these things into buckets. We have the ticker symbol, as I mentioned, and then we have some financial statement data. We have assets, we have net income, we have sales, and then you'll notice out here we have, this is the industry code. And so all of these are in an industry that starts with a 5. This is the retail industry. And so that's the data we have. And it looks like if you go down to the bottom, we have 161 observations. And what we're going to do is we're going to just calculate some descriptive statistics. So maybe first thing we want to calculate is, before we do this, we want to go to View here in Excel, and I'm going to freeze the panes. And so this will allow me, as I scroll down in the window here in Excel, it'll keep the header row up top so I can see what I'm looking at. So as I go down to row 162, the last observation here in row 162, I can still see the header row up top. Okay, so that's View, Freeze Panes. Okay. So I'm going to want to calculate a few different descriptive statistics here. So I'm going to do mean, which is average. So let's call it average. Median, which is like the middle point of the data. We can look at minimum. We can look at maximum. What else can we look at here? I think that's pretty good for now. We could also look at things like standard deviation, which tells you how much variation there is in a certain variable. We'll put that in there as well. But these are pretty common descriptive statistics that people look at. And the reason I put these in the rows is because I'm going to calculate average, median, minimum, maximum, standard deviation for assets, net income, and sales. So what I'm going to say here is I'm going to insert a formula. So I'm going to go up to this function button, and I want to look up average, the formula for average, the function for average in Excel. And so we'll use this first one here, and we're going to say we want the average of all the asset observations. All right, and we're going to say okay. So now we get our average of this is in millions, right? So this is the average total assets in the retail industry is $8 billion. So let's change this number format so we can see it a little better. So this is in millions of dollars. So we see that the average total assets in the retail industry is $8.7 billion in 2018. All right. Now let's change this to absolute references. So you'll notice in the formula, we're referencing cells E2 through E162. And what I want to do is I want to copy this formula. I don't want to redo my work. I want to copy this formula into the other variables, the other columns here, F and G. But when I copy it, I don't want to change which rows I am pulling from. So I'm going to put a $ in front of the 2, row 2, and a $ in front of 162, row 162. And so this tells Excel, whenever I copy this formula, you can move the column reference, but keep the row reference the same. Keep the row references at 2 and 162. No matter where I copy it, keep those references the same. That's where. And so you'll see nothing happened in this cell, but now when I copy this formula over into net income and sales, I can do this a couple of ways. I can place my cursor over the box until it turns into a black arrow, and I can click and drag the formula over. Another way to do this is just do Control-C, copy, highlight the cells that we want to paste it into, and do Control-V. Okay. 2 different ways to do the same thing. The other cool thing is I can use the same formula for median. So you'll notice it's still calculating the average when I copied the formula down, but if I want to change this to median, all I have to do is change the formula to median in the formula bar here. So now I'm going to calculate the median. Okay, so now I have the median. The middle company in this sample, the middle company has a asset size of $1.4 billion. We can copy this down into minimum. So all I have to do is change median in this formula to min, which is the minimum formula. So now the minimum amount of assets is 7 million. It's a pretty small retail company. Let's see what the max is. So we'll copy this formula down, we'll change this formula from min to max. And we see the largest company in this report is $204.5 billion. That's huge. 204.5, and so that is a pretty big company. And let's see what the standard deviation is. So standard deviation is a measure of like how much asset values vary within this sample. So we can search for standard deviation, and it's this formula here, STDEV, right? And so we're going to look at E2 through E162 once again. We're going to put our absolute references in here so that this doesn't change when we copy it. And we can see the standard deviation here is about $26 billion, or $26.7 billion. That's how much asset values vary within this sample. So it's a lot of variation. And that makes sense because you can kind of see that the smallest observation has 7 million and the largest has 204.5 billion. So there's a lot of variance in this sample, and it makes sense that we have a variance of, that is as large as $26.7 billion. So this is just measuring, how much, how different are these companies? If you were to go from the smallest company in the sample to the biggest, or maybe the company at the 25th percentile all the way up to the 75th percentile, how much do these values change? And the bigger this deviation number is, the more you have variation, the more that these asset values fluctuate within the sample. That's all that this is saying. So let's format this so it looks like the other ones. And now we have these formulas set up. We can carry them over. So we can see the minimum net income is actually a loss of 594 million. Minimum sales is less than $1 million, $890,000 worth of sales. We see largest net income is 10 billion, and the largest sales are close to $500 billion. So it's pretty significant numbers here for these observations. So this is kind of the first pass at doing data analysis. You're just trying to get a sense here of, what does your sample look like? What do the observations in the sample look like? And, just getting a sense for, how big are these companies in terms of assets and in terms of sales. We did this using formulas at the bottom of this table. Another way to do this is to use a pivot table. So you could go up here, you could say insert. We could do pivot table, and we're going to want to change the references here. We're going to want to pull data from just the main part of this original table. We don't want our formulas from the bottom. We're going to put this in a new worksheet, right? And so let's say we want to, so over here we calculated what? Mean, median, min, max, standard deviation. Okay, so let's say, and we did it for assets, net income, and sales. So let's say we want assets, net income, sales, right? And what do we want here in the rows? We want this. So we don't really want anything in the rows. We want, all we want to know is, like, across all observations, what is average total assets, right? So let's change this from sum to average, right? So we got average total assets of, let's format this a little bit, 8,695,032, 8.7 billion basically. That's what the pivot table is telling us. And if we went back and compared this to what we got on the, just give me a minute here, compare this to what we previously calculated, we get the same number. What if we change this to, instead of average, we want to calculate, let's see if they give us a median here. It doesn't look like median is one of the options for the pivot tables, but we can do the minimum. So minimum assets are 7, same thing we got here. How about max? Let's look at what the max is. Max 204.5 billion. 204.5 billion, same thing. Let's see if we can do standard deviation. Let's see, standard deviation in here, let's say 26.7 billion, 26.7 billion. Okay, so two different ways to get the same statistics. You can continue this process in the pivot table and calculate all these things for net income and sales, but I think you get the point here that, you know, there's a couple different ways to calculate these descriptive statistics. And the goal in calculating these descriptive statistics, again, is just to get a sense of, you know, what do you have in your data? What is the, you know, what's the size of the average company? Let's say we wanted to know who has the minimum, right? The minimum sales amount. Let's say we're kind of suspicious of this data point. So let's add a filter here. We're going to go up top, we're going to add filter, and we're going to go to assets, and we're going to say sort this smallest to largest, right? So it looks like our smallest company is this ticker symbol STRZ, and 6.98 million. I'm just curious now why it got rounded up. That's why. Okay. 6.998 million. Alright, so we got a rounded value down here when we did the statistics because of the way I set it up. But this corresponds to this company STRZ, right? So let's find out who that is. Maybe we're suspicious, right? Maybe we look at these descriptive statistics and we say, well, does that number make sense? Do we have a bad observation? Is there a bad item in our sample? Is there really a company that small where they only have $7 million of assets? Maybe this is a data mistake. Maybe we got to fix it. So then we say, we look at this and we go, oh, well, that doesn't really make sense. That might be too small. So let's go look at this company, STRZ. Who is that? Let's go to cc.gov, right? And we're going to say, who is this company? Why are they so small? And we're going to go search filings. We're going to look for company filings. We're going to search by company name. And let's see if we can find this company, STRZ. What is this? Star Buffett Inc. Star Buffet Inc. Let's see who this company is. Alright, we want to pull up, let's see, 10Ks. Change the interface here recently. So I want to find 10K from 2018. What's the we go back to our Excel file. This is the year end January 31st, 2018. So we want the 10K that was filed in the early part of 2018. 10K is the annual report. And let's see here, 10K annual report. Here it is. Okay. This data point doesn't make sense to us. Let's look at this. Is it really that amount? Is it really $7 million? Let's go to item 8 in the financial reports here. So let's search for item 8. All right. It says CD index, the consolidated financial statements included at item 15. Now they're redirecting us. Here we go. Here's the financial statements, and let's see, assets. Yeah, it looks like it's right. So assets for this company is 6.998 million. Right? So this is not rounded. They don't make any notes about this being rounded. This is the actual value. So you can see what CompuStat did. They went to this financial statement and they pulled this data out, and then they put it into an Excel format like this so that we could work with it. And so it looks like this is a good data point. And so a useful thing with these descriptive statistics is kind of identifying issues like that. You know, does it really make sense that we have a company in this sample that has only $7 million of assets? Didn't appear like it did make sense, but when we went and looked at the actual SEC filing, it seemed like it was a good data point, so we're good. So hopefully this video gives you a sense of different things you can do with descriptive statistics. It gives you an idea of how to calculate descriptive statistics in a couple different ways. And I look forward to talking to you again soon.